Good afternoon, everybody. It is Friday, the 8th of July. Cheers to everybody. I hope you had a good trading session out there. It is whiskey time, so cheers to the whiskey. And for those of you who have a nice little glass, in celebration of today, I guess you guys saw or heard the news and saw the picture I posted of James Caan, who passed away. Actually, two of my just favorite movies. Misery is one that just tortured me many moons ago. That was just such a great, great movie. And then probably one of my favorite comedies, I would put a top 5 of my comedies of all time, Elf. I will never forget himself. Of course, Sonny from The Godfather. So cheers to James Caan for an amazing career, and thank you for all of that amazing content you've given us over the years as well. All right. I'm going to real quickly walk through kind of our top 7 markets, and then I will dive into listener questions. I got 3 that were sent in over the last night. Most of you are sending those in to the right place, which is at YouTube. Go to our YouTube channel, like I got a team. Go to my YouTube channel. And you can just simply go to any of the videos there that you watch, put your comments, questions down below, things you'd like to see, and I will incorporate those into the show. Let's start things off with our top 7 markets. Not the most exciting. Actually, I should probably not even start with the markets. Let's not get ahead of ourselves. Let's start with the economic data, shall we? Here's the data that came out today, pretty much in line with what I expected. You guys, earlier in the week, you heard me talking about the potential for unemployment numbers to jump a little bit higher than expected. Then I kind of backpedaled, and I thought, I don't think that you're going to see it impacted yet. I think next month we'll probably start to see it jump a little bit. You can see we came out here at 3.6% unemployment, which is great. I mean, that is historically a very low number, and one that I'm sure the Fed is very happy about, and they will be pointing to that one going forward. I'm looking at it because it's such a historic low that where can it really go, right? In my opinion, it only has one direction it can really go, which is going to be the upside. My only question is, how intense or how quickly will it start to move to the upside? Now, the other economic data, you can see right above that. Let me get my pen out here. You can see they expected for non-farm employment change. Previous number is 384,000. They were expecting a huge decline in non-farm employment change, basically saying the number of jobs was just evaporating, going from 386 to 260. Well, what's interesting is it did drop, but nowhere near expectations. We only fell 12,000 jobs this report to 372,000. That's so much better than the expectations, which is part of the reason I think you saw the recovery that the markets did today. It started off relatively weak and then worked its way back up into not bad numbers for a Friday, especially when you look at things like technology. One other area that I thought was noteworthy here for the U.S. was average hourly earnings. I don't generally pay too much attention to average hourly earnings, but it was in line with expectations, and therefore the U.S. market looking pretty decent. And around the world, you can see Canada had their unemployment rate numbers. They dropped, so Canada looking even better with regard to their unemployment, and that's really the main stuff for the day. Now, if we take a broader look at the week, because this is the Traders Week wrap-up, I may as well just show you this, which is pretty much everything that happened this week. And I don't see anything on here that screams of outlier or screams of pain in the financial markets. You look at the top there on Wednesday, we had our JOLTS job openings. Look, they were expecting it to go to 11.05 million from 11.68. Well, we dropped to 11.25. So even though the expectation was horrible, we did contract, but nowhere near as much as expected. So that was positive news. And you move to the meeting minutes that happened on Wednesday. That cast a shadow on the rate announcement. And of course, I think that the jobs data today really kind of pushed the envelope and said we're probably going to see a 75 basis point on our next FOMC meeting, which I will bring you that chart right now. That's going to be on the 27th of July. It's actually interesting how it changed. You notice yesterday there was a chance of a 50 basis point increase and 3%. Let me rephrase this. Yesterday, you will notice that there was a 3% chance of a 50 basis point increase and a 96% chance of 75 basis points. Today, it's upped. It's moved up the ladder, a 93% chance of a 75 basis point increase and a 7% chance of a full 1% pop in the Fed funds rate. So I'm pretty sure we're going to see 75 basis points, but we do have another 2 weeks until this number comes out. So we'll take it slow and see how this one pans out. But right now, people raising their expectations about what the Fed is going to do with regards to rates. But Tom says, expectations off by 50%. How do I get a job being that inaccurate? I want to be an expert. Yeah, I agree with you. You know, the one that I just have the hardest time with, let's go to crude oil inventories. This is the one that just blows my mind, and I've poked fun at this. I think it's the IEA. I forget who does this report, but you can see crude oil inventories. They showed a contraction in the previous week of negative 2.8 million barrels, and they thought we were going to lose more inventory, go down to negative 1.6 million barrels, right? So still contracting in supply. Well, look what the number we came out at. We came out at a positive 8.2. Combine that, that's a 9.8 million barrel of oil difference. You talk about being wrong, Tom. Like, this is the most unbelievably erroneous report number. I don't know how it could possibly come out every week with confidence. This is like listening to a Jim Cramer stock pick. You're generally going to be the opposite of what that report is supposed to be. It is unbelievable. And I want you to think about it. A barrel of oil is 55 gallons. You got, is it 55? I think it's 55 gallon drum. So you take one of those, and that's a decent amount of oil, but now I have 8.2 million of those. Like, I could literally fit in a football stadium and stack it to the rafters, that many barrels of oil. How are you off that much? The job numbers manipulated. Yes, personally, I do think that they're manipulated. Again, I interviewed a guy when I was doing Power Trading Radio for Online Trading Academy. It wasn't Peter Wallison. I forgot the gentleman's name, but it's in the archives of Power Trading Radio. He worked for the BLS, the Bureau of Labor Statistics, and he says, yeah, we modify the data to fit specific political agendas. And right then, my belief and my trust in those numbers has just diminished significantly. Like, unbelievable. I don't care. I think that almost every piece of data you see here is a lie. However, if it is a lie, that's okay. But this is still the information that's being fed to the public. So I need to understand what the public is being fed so I can formulate an action plan off of it. Whether it's good news or bad news doesn't matter. I just want to make sure that I see what the population is seeing and hopefully act on it. So Cramer's doing all this expert forecasting. No, Cramer's not doing oil and things like that, but he's definitely calling stocks. Like he said a couple days ago that crypto is, going much, much, much lower, and all of a sudden we had a bounce from it. So now the industry is giving him a hard time on crypto. I mean, basically watch his tweets, and you'll see it kind of doing the opposite of it. I almost feel like he has institutional involvement pushing him the wrong way. There you go. 55-gallon drum is 42 gallons of oil. 42 gallons per barrel of oil. Thank you for that one, Gary. So, yeah, that is the most inaccurate number I have ever seen, and it's this way every week. Like, I don't know what they're smoking over there or drinking or just decide to throw a dart at a wall and pick a number. That probably would be more accurate than what they're doing over here. And this number is the EIA, the Energy Information Administration, another government office that does absolutely nothing with regards to their reporting. Anyway, got me off on a tangent there. You look at later on in the week, though, this is really where I think things got important. On Thursday, you did have unemployment claims slightly higher than expectation, so that's no indication really that we're in a massive unemployment phase, but it does show that there are slightly more people filing for unemployment, if, of course, you believe the unemployment claim data. But down here at the bottom is the real one. You had non-farm employment change, unemployment rate, and average hourly earnings. That is kind of it for the economic data for today that I wanted to get to. Now, before I dive into the 7 markets, I wanted to show a chart here, and I love... One of my personal favorite things is just looking at charts, and not necessarily price charts, but I love data charts and economic data charts. So one of the Federal Reserves, I forget which one this is, I think it's St. Louis, they issue tons and tons of charts and graphs about economic data and current conditions in the market. The one I'm going to show you is real personal consumption expenditures, basically who is spending money on goods. Check this out. Percent change from a year ago, we are seeing now a huge contraction. So you can see where we went in this recession. That's this little gray line right here back in 2020, right? It was a momentary recession. And spending went from 5% year-over-year change to over 22% year-over-year change. And then it completely cratered, and now we are negative, looks like 4.5%. this is a very bad sign. As I mentioned many times, the U.S. is a consumption economy. If we stop spending, the wheels don't turn anymore. And that's kind of what I'm watching, because if this does in fact hit our retail sales data, then what we should start to see is layoffs. And we are seeing some of those start, but it's not really heavy yet. We'll have to wait and see what those transcript about to be. But I thought this might be an interesting one, where you usually don't see these types of huge contractions in personal spending. Last time we saw something sub-zero was back in 2008, and we went all the way down to -7.5. So we'll see if we get down that far here with the current slide. And of course, you guys might remember what happened to our markets back here. We dropped 57% in the S&P 500 during this period of time in 2008 when we had the same looking chart. One of the next important inflation numbers coming out, that's going to be next week, Indigo. Next week we have CPI and PPI numbers both coming out in the same week. I keep racking my brain about what are those numbers going to look like, right? As anybody who's watched this show regularly, I've really been looking at those commodity prices, which to me at some point will move its way into a lower CPI. But is it this month? Is it next month? Is it going to be September, October? My guess is probably September, October. You'll start to, if we continue to see these declines, and for those who might be new to the show and just watching, I'll just real quickly run through the charts. I won't explain too much because I've done it over the past couple of days and I'll probably bore you to death with it. But, today there was a great day for wheat, 6% gain, but still, look at that down move over the last month on wheat. It's like 30% drop. Same thing for cotton. Huge downside move. Let me get the volume off there. Here's your corn chart. So commodities are certainly selling off, and that's going to have an impact on the CPI numbers and PPI numbers down the road, but not immediately, right? I feel like they've been falling long enough for a month or so that you'll start to see them impact, but that it could take several months for it to be a major sell-off in that area. All right. When is your PD numbers for Q2 coming out? That I don't know, Robert. It's actually, if you want, you can. Forex Factory's got a great piece. So what I love to do is if you go to Forex Factory and click on calendar here, right, that'll bring up all markets. And I generally look at everything, right? You can remove different markets, but this is everything. And in the upper right-hand corner, you see there's a little filter button. You can remove whatever countries you don't want, or specific data types, or importance. Really kind of a cool thing here at Forex Factory. So let's just remove all of them, and I'm going to put just US, and I'm going to take out miscellaneous and speeches and business surveys. Let's just get to, there we go. So that's my filter. So all you have to do is run this filter, get rid of most of the stuff, and just click forward. I believe it's in a couple of weeks here. We have our GDP, but it's going to be, well, it's not next week. I knew that. It's not the week of the 17th. So here's your advanced GDP, which is the first one. That's going to be Thursday, July 28th will be the next one. Big Eb is already on it. I got Big Eb. No, it's actually on the 28th is the actual day. That will be at 5:30 a.m. Pacific time, so 1 hour before the markets open. But this is really an incredibly important number, is the advanced. The final GDP, which we just got a week or so ago, is not that big of a deal because it's pretty much what the advanced GDP number was, right? So we'll be focusing on what that advanced GDP number was. Previous one was a contraction. We'll see if this next one is going to be a contraction as well, at least forecasting a contraction. Sure, we can talk about gold and silver. We can always talk about gold and silver. We'll talk about commodities a bunch today, that's for sure. Real quick before I do that, NJ, since he's usually regular here, let me just get this question out of the way. NJ says, are rating agencies still bullish on equities? How can you track these companies that are doing fundamentally good but getting slammed because of the market, bear market? Well, one way you can do that, it's actually a very simple way, is just run scans and filters, and run a scan and filter for specific economic or fundamental data that you're looking for. One of the great sites for that, which I'll bring up here right now, is FinViz. They have a really nice screener. I'm sure there's many others out there that you guys can use. Oops, typed it wrong. So here's FinViz. I'll share that. If you go over here to Screener in the upper left-hand corner, there's a Fundamentals tab. So you can, real quickly, just go by whatever metric you deem to be a sign of something that's doing, fundamentally good. Run those margins there, run all those criteria, and then it'll spit out a list. And then ultimately, I would just click through and build a watch list and track it. This is kind of what Larry does on a regular basis. Larry Jacobson of Online Trading Academy, he likes to look at the long-term fundamental pieces. And, a company like Amazon, he is actually very bullish on Amazon right now, extremely. Why? for exactly what you say here, NJ. He's looking at companies with good fundamentals that are just getting slammed right now. Now, you asked at the beginning, are rating agencies still bullish on equities? This is a blunt, condescending, rude comment by myself, but who cares? After you watch a movie like The Big Short, does anybody here really have any confidence in the ability of a rating agencies? Or, Fitch, Moody's, S&P. I have zero confidence, nor do I care to hear if those agencies are upgrading, downgrading, bullish, bearish. I could care less. Well, what I saw happen in the movie The Big Short basically made me lose all trust. It's kind of like saying you got a family member that you invite to your house, and every time they show up, something just kind of disappears. At a certain point, you're going to go, you're a thief. You're no longer coming through my front door. And for me, rating agencies, no longer coming through my front door because they're bought. Rating agencies can be bought by these companies who have very deep pockets to sway the opinions of the public. So I could care less right now what the agencies say about anything. Now, for the longer picture here, if you're looking at fundamentally strong companies, I think that there's a lot of opportunities out there. You look at companies like Apple, which I can't trade, but a lot of people are looking at Apple going, hey, it's trading at a huge discount right now from its all-time highs at 184. It is, sure. But I guess you have to weigh for that, weigh the pros and cons here. If I'm buying Apple or Amazon or Facebook or Goldman Sachs or Wells Fargo, whichever you think is a good value play, do you think it's going to survive if the market keeps going down? Right? Like if the market drops another 20%, is it still going to drop down? Well, they probably are. So you have to kind of accept that these are generally going to follow the overall market. Now remember, Apple kind of is the overall market when you look at something like the NASDAQ. It's the most heavily weighted component in there. It's going to be a little bit biased. But you look at something like Amazon. I believe Larry says that his fair value price for Amazon is $179, which is way up here. And he bought it at 103 or 104 or something like that a couple days ago. So how do you find them? You have to know the criteria that you're specifically looking for. I'll be honest, I'm not really a value investor. I don't care for that type of stuff. I'm not really looking out for the long haul with regards to holding stocks. Crypto I will, but I'm not going to be holding, and commodities I will, like gold, silver. I'm okay holding long-term, especially physical of those assets. But for the most part, I don't care about holding Apple or Amazon too long-term. All right, which movie, Glenn? Which movie are you talking about? He's done so many. If you look at James Caan, he's got to have well over 100 films that he's been lead actor in and back up a ton of other ones. Let me grab a real quick sip of whiskey here so I can keep on rolling. So this question I thought was humorous from NJ. He says, how does a trader maintain their young-looking genes and not get old fast? I've seen instructors and people that I know trade for a living, but they grow old fast. What are you saying? I mean, I'm only 23 years old. What are you saying there? I've been... yeah. Oh, The Big Short? Yeah. You should check that movie out. I'm sure that it's dramatized a little bit for Hollywood, but... to me, it is a look behind the curtain of Wall Street and Wall Street versus Main Street. Some information going out here, some information going out there. The Wolf of Wall Street's great. That one's hilarious. Oh man, over the top. And that was also true. I remember those boiler room type of days. I knew people who were in there in boiler rooms trying to get sales. Yeah, I'm old. Thanks, Margaret. 26. No, look, I guess. It's not just about, I would say this, trading does age you prematurely, and I would say that has a lot to do with the stress involved with it. So what do you do to overcome stress? You eat right, you exercise, you take care of yourself, and you do things that make you happy and relieve stress. Period. If you just, margin call is a great one as well. If you just, trade and you're angry all the time and you eat nothing but fast food and you don't exercise, you're going to get old real quick and probably die sooner rather than later. So get out there, exercise, do something good to take care of yourself, especially with, COVID and those things. Keep your immune system strong. Try not to drink too much alcohol. Cheers with a glass of whiskey. Might want to read the case study by Enron. If there's a movie or audiobook on it, I'll love it. I hate reading, Randall. It bores the hell out of me. I'm really not a fan of reading, but I remember being around during the whole Enron scandal. Anytime, and I've mentioned this to all of you, anytime you are looking at investments and someone says, hey, check this out, or buy this, or upgrade here, or downgrade there, look, that is most likely an attempt to sway your opinion about something. So you should always take even here, I mentioned that, don't take what I say as absolute. Everything I talk about here is just an opinion. And as many of you have pointed out, I'm wrong. There are times where I am wrong for sure. However, I will own it and I'll admit that I'm wrong when I'm wrong and hopefully learn from it and make my decisions even better next time. But one thing we all understand about these markets is there is an element of unpredictability and we're going to be wrong. Just accept it. What kind of whiskey I'm drinking today is Angel's Envy. Angel's Envy today. Wayne, good to see you. We might swing by Shabu. I'm going out with a buddy of mine tonight. We're going to go to Din Tai Fung. Anyway, ever been to Din Tai Fung? That's our dinner for tonight. But we might swing by on Saturday and have some Shabu at Old Cow Shabu. Okay. That one is from NJ. Let me go one more question, then I'll run through the top 7 markets here so we can see what happened out there and where some of the plays are. Rudy was asking me, he says, would you be a buyer of bonds such as TLT or STIP since they dropped a bit and the yield looks pretty good? When you look at a question like that, Rudy, it really depends on the objective of the trader or that investor. Now, for me personally, I don't use bonds. I don't care about a 1% or 2% or even a 3% rate of return by bonds. To me, I would much rather take my capital and be more aggressive with it. But I think that has to do with my background. I am a trader at heart. So if I see a 2% bond yield on, let's say, the 10-year, or yeah, call it 2%, but make it 3%. I would much rather take that and make some equity plays or sell some options. And instead of making 3% per year, maybe I make 1% per month. I would way rather do that with options or even buy equities I feel are undervalued or joining the trend. So to me, it is a moot point. I'm not a buyer of bonds, period. Now, would I sell options against some? Yeah, based off technical patterns. You look at something like TLT, which is your 20-year bond, this is perfect, right? What do we say about trends? Stay with those trends until they bend at the end. And we have this little yellow box here, which would have been the logical retracement for TLT up in that upper supply zone right around 115. It almost got there, and now it's tanking again. Why? Because yields are starting to rise again. So, buying TLT, when you look at this chart and you go, man, TLT is down so much. That's a fool's errand in my opinion, right? Because this trend is still going down. The probability is higher that yields are going to rise. That's what TLT is telling you. TLT's dropped for 3 consecutive days. That's the premium for the bonds. The yield is opposite that. So if premium drops, yield goes up. So I'm not a fan of TLT. I'm buying for my portfolio. Here's STIP. Right, here's your 0 to 5 tips. Again, you're looking at this one going, well, I'll buy it because it's declining so quickly. Well, I wouldn't do it. But again, if you're older looking at retirement and looking for income streams to lock in those, great. Karen says short TLT. I think that if you just look at probability, and I said, what's the better probability to go long TLT or go short? Short is the answer, right? Now, Karen has to be careful there because you're shorting something that's already down so much, and it could have a real quick whip back up. Right, and I think what a lot of people are looking at here is you look at TLT back in 2020 and it spiked out. It peaked at about 169, and here we are at 112. You're like, man, that's a huge discount for bonds. You're right, it is a huge discount for bonds. However, this could still keep dropping, especially when you look at the Fed funds futures rate. Right now the expectation is that this FOMC meeting on the 27th, you're going to get a 75 basis point increase, right? Well, again, December is basically saying we're over double that. There's a 44% chance that we are going to more than double that rate. And if that does happen, what's TLT going to do? This is going to keep on dropping. So I think Karen's in the right seat for sure. You just got to be ready to admit you're wrong if it starts ripping up, Karen, or have a stop loss in place just in case. It depends on where you think the U.S. dollar will go. That's a good point. And USD, I love it. I told you guys the other day I'm going to Europe, and I'm so glad this is happening because I think you're going to see the euro at parity very soon. Here's your weekly on the dollar index, right? Depends on where you think the U.S. dollar will go. Let's just do a poll since I've got a few people here today. Where's my poll at? Never mind. I just sent a poll out that said nothing. That was beautiful. Let's see. Let me try that again. Will the dollar higher? Just curious. Will the dollar go higher or lower? You know, you look at this trend right now, and this is a weekly, by the way, so this is a much stronger trend. You know, playing probability, I guess the real question that you should be asking me in that survey is in what time frame, right? Is it going to go lower to the next week? I think so. And will it go lower in the next, 3 to 6 months? I don't think so. I think in the next 3 to 6 months, you're probably looking at a much higher dollar value. And main reason is, again, Fed is selling bonds, mortgage-backed securities, and treasuries. They take that money, they retire it. Less dollars in circulation, more people are trying to buy dollars because of the rising yield, therefore dollars going up. We've got the weekly here, and you can see some of those price points. 108.73 is the next target we have, which is a supply zone that goes all the way back to 2002. 20-year-old supply zone that we're coming into as we speak. Love it. After that, there's a level at 113, and then ultimately, it's pretty much 120 for the dollar. Again, if we do see the dollar hit 113, where do you think the S&P is going to be? If we hit 113 on that U.S. dollar, we could see the S&P down around 3,200, which would be a significant drop from here. That's another 700 points. That's close to 20%. So, yeah. So let's see. I'll end that survey real quick just so I can show the poll. Doug says still long on USD JPY. That's a great place to be right now. Yeah, so 93% of you say the dollar will go higher. 6% say it'll go lower. Yeah, I agree. And I think the real question is what time frame, right? If you're long term, the dollar just seems to be clearly heading higher. If you're short term, I think you're due for a pullback. I mean, this is a pretty aggressive move that we've seen here on the weekly. Check out the daily. You had a shooting star today. Everybody sees that lasso candle? That says to me pullback, right? At one point, for those of you who might not know candlestick patterns, I'll zoom in. This candle right here, the very last one you see there, that's a shooting star. It's at the end of an aggressive uptrend in the dollar. So, to me, this looks like it's going to come back down, have a retracement back down. Now, does it go all the way down to 105? That would be a logical target, wouldn't it? Right? But I don't know. We have to map out our trades. If it does drop to 105, expect a market rally next week. You look at these equity markets. Do they look like they're going to rally? Yes. This is a cup and handle formation. So this looks like it's gaining strength. Everything right now is lining up, in my opinion, for a dollar pullback and an equity rally. If the dollar pulls back to 105, we're probably going to see the equity indexes rally up to here, which is right around that 4,100 mark. That would be the next logical target. It's not rocket science, and it's not 100%. It's just saying, this is the charts, these are the facts that are presented to us, and if this does this, then this should do that, period. Good, then the market will rally and I can load up on put contracts. You and me both, Big Eb. You and me both. It was funny because I was looking at it today, I'm like, oh, I want to pull the trigger because I love selling options on a Friday. Because you get two free days of just decay where nothing happens in the market. Fridays are like the best day to sell weekly options. However, I didn't do anything today with regards to options. I will wait until next week, but I am waiting for a little bit of a rally. I would love to see a nice relief rally where all the mainstream media says, whoo, the market is bottomed, we're safe, and it pops up, hits some supply zone, and all these retail investors start loading the boat, and that's you're like, oh, here you go. I'll sell some options. I'll sell some puts out there. Love it. Bring it on. Actually, not sell some puts. I will be buying some puts if it rallies up to those levels. It does not seem to be correlated lately, the dollar and the ES. I wouldn't say that they're tightly correlated by any stretch. Here's your S&P, right? But notice that you have the S&P drifting down. And then what's the Dixie been doing over that same period of time? It's been drifting up. So they are inversely related. I showed you guys a resource, which is MRCI. You can find out these market correlations, which are just a great resource for anybody who wants to understand the history of these relationships. But here's your DX, which is the dollar index right here. I'm mousing over, and if I scroll down, you can see that there is an 87% inverse correlation to the S&P 500 over the past 30 days. Over the past 120 days, there is an 82%. Let's see, the S&P 84%. Over the last 30 days, it's about a 72%. So it's always going to be inversely related to the overall indexes. But anyway, this is a great resource. I'll paste it in chat for you guys again. for some of you who may not have gotten this resource, but it's just a really cool table where you can see all the different relationships between a lot of commodities and currencies and indexes. Just a great resources. Indexes like the 50 mark, 4150 has, yes, and again, I love having David Warner on the program because I think it's nice to see things from a different perspective sometimes. David Warner likes to use whole number psychology, and I'm a huge fan of that. I've done this test with you guys many times where I'll say, everybody type in a number into chat. And what happens is the vast majority actually do that just for fun. Let's see if I can, maybe it'll spike my, when you have a lot of comments going on in a chat, I think it actually helps you as well. So we'll do the experiment for anybody who's not here. We've already done it, so most of you are going to ruin it for me. But type in any number you want into chat, and you'll see that the basic of group psychology. Let me just finish this last little bit of Angel's Envy here. Margaret says, have you ever used PE ratios? Sure. I've used PE ratios. Right now, since they're looking to revise PE down. Well, you don't revise PE down, right? You don't. It's a simple calculation. It's price to earnings, right? So you take the current share price and you do earnings. So there's no revision there. It's just those numbers are going to change, and the expectations are that it's going to drop. Why? Because prices are really high and earnings are going to start to slow down. So that ratio is going to change. So there we go. And again, Tom and Les know the routine. I think Les is going with pi right there. I think pi is what, 3.1415926 or something like that. Big Ed with the 0812. Thank you very much for that one. Most people pick whole numbers, and it's just the way we think. You think now you guys are learning that more and more as you look at price charts, but if I asked you this and you guys have never heard that survey before, I'd say 99% of the people in here would have picked a whole number. That's just the way markets work, right? It's the way that we think, which is why when you go to see price tags, like you go to Costco, the item is not $100. It's never $100. It's $99.99, and your brain goes, "Whew, at least it's not $100." It's a penny lower. Government of psychology. Okay. There you go. Perfect. Anyway, I'm off on random tangents. It's the whiskey. It's the whiskey doing it. Okay. There was a couple questions. I think NJ, you asked me about Chewy, right? At CHWY. I think that's it. Yeah, you asked about Chewy. So let me check on Chewy for you. From a technical perspective, Chewy has looked like dog poop, right? It has been real ugly. I'll just draw that trend line from the peak. I'm not actually drawing a trend line. I'm just going to see how much it has declined. It was down at 1.81% since the peaks in 2021. So maybe there was something fundamentally wrong with the business model or how they were conducting their business. But right now, you make the argument that this looks great, right? You're seeing a reversal of fortune. Now, it hasn't made really a new high. For me, a new high has got to break above some of this area here right on 54. But again, that's still $10 away, right? That's still $10 away. So at this point, I think that if you are looking to go long on Chewy, it's more about buying a pullback here. And if it does pull back to, let's say, 34.80, great, you got a buy point there, maybe even $40. If you do buy that one, make sure you have a stop loss in place because we could see this reverse, right? It hasn't technically made new highs yet, even though it's been on a great trend for the better part of 2 weeks. Chewy looks really good right here, and don't know exactly what changed. No pun intended, Bocho. That was pure pun intended, because it is a dog food or dog toy company or pet toy company. So, this is one of those moments with Chewy where you have to ask yourself, is this the change, right? You hear me say it all too often. The trend is your friend till the bend at the end. Is this the bend in the end for Chewy? I have a hard time thinking that it is officially the bend at the end and this trend is no longer down, simply because I believe the overall market is going to continue on down. However, this looks like a great long potential on the next pullback into a demand zone. Buy long on that one and make sure you got a stop loss in place to find your risk, and I think you'll probably do pretty good. So NJ, I like the Chewy call. Let's see. All the money my wife spends at Chewy, this should be yeah, I know. People love it. I mean, it's great. Cup and handle on Chewy? No, I wouldn't call this a cup and handle. So I think you're looking at it from this giant cup here and this little itty bitty handle. To me, where, right? Because normally a cup and handle is a straight line like that. Well, that doesn't fit. It doesn't work right there. And some people might torture this a little bit and make a cup and handle that's got an angled line, like maybe here, right? I mean, look, it's all subject to interpretation. I personally wouldn't call this a cup and handle, but I love this one. I call this a cup and handle. Why? Because look at what price has done. Price has hit these highs, and now it's come right back up to it. That is a cup and handle. Clear horizontal line, okay? So Gallo, you know, at least for me, I want it to be as horizontal as possible. The reason for that is simple, because everyone's going to be looking at the same number. If it's an angled line, it really depends on how those individuals drew that trend line. And if they drew it differently, you're going to get different entry prices. I'm really looking at the group mentality of a breakout trade, because there's scans and filters right now that are bringing up the S&P 500 or the Dow or NASDAQ, right? NASDAQ is even better. You have this huge bottom, there's your handle. It wouldn't surprise me to see another little dip form, right? But it looks real strong right now. So I wouldn't say cup and handle on Chewy, but definitely on the major indexes out there. What else? So I mentioned we're going to go through the top 7. Let's just do that, starting at the bottom. It was kind of a boring day for crypto. There's still a lot of talk about what's going on with Celsius and Three Arrows Capital, guys. This is going to be a soap opera that continues on for quite some time, in my opinion. All in all, technically, nothing really special here on the Friday. However, you can thank Jim Cramer, because back here on July 1st, he was saying that Bitcoin, or that crypto is going to go even lower, and we've been rallying ever since. So Jim Cramer, please continue to disparage cryptocurrency, call it a scam, say that nobody should buy it, and hell, we'll be up at $100,000 in no time based off Jim Cramer's inverse relationship to the market. So for me, as a technical perspective, I don't see anything that's screaming at me to say buy Bitcoin, but it is reassuring that we've had these up days. I still don't think we're out of the woods yet. I think we got liquidations coming in other assets. Here's your Dow Jones Industrial Average, which I mentioned has a very nice cup and handle formation. This is really kind of a wait and see type of moment. This also is really subject to your own interpretation of price, right? Notice where I drew this. Let me get this line off the screen. Notice where I drew this little horizontal line. I did it to the peak of this big green candle that happened on June 24th. Why? Because you notice that that's pretty much the main point that these 3 candles all hit. I'm going off the real bodies. Now, I know some traders will put their line way up here. Well, that doesn't quite make it a cup and handle formation in my mind. This looks a little bit better for me, so I'm modifying it, because today we rallied right up to that line, which is 31,491 on the Dow, and bounced down from it. So that's my line. Of course, wherever you put it is up to you. If you put it up here at the peak of this candle on the 28th of June, which was at a high price of 31,867, you've got a ways to go to get there. S&P 500, which was pretty much unchanged on the day, 0.01%, also has the exact same picture as the Dow. Looks a little bit better in my opinion. Not much to say there. I'm going to skip gold for now because I want to do gold and silver together. Here's your Russell 2000. Same picture as the other indexes. Nothing to speak of there. It was up pretty much unchanged. You have NASDAQ was slightly up on the day. But again, all of our major indexes looking absolutely identical. Now, the one that doesn't look identical is, of course, crude oil, up 2.01% on the day. Nice little rally there. Very happy because, as you guys know, I sold XLE puts that expire next week. And I'm like, great, let them expire worthless. I will collect my premium and enjoy it all the way to the bank. From a technical perspective, though, you have to ask yourself what's going to go on here with crude oil. It looks to me from this picture that you'll probably have a rally up, maybe up to the 108, possibly even higher to like 111, and then come back down, that this trend is now down. You see lower lows and lower highs on it. Ultimately, probably having some difficulty right around that 93.50 mark on crude oil. But again, time will tell if we hit those levels. Now, gold. Here is your gold chart, which had that aggressive sell-off earlier in the week. Now we're just basically seeing 2 consolidation candles, which are long topping and bottoming tails, right around 1733. So look back at 1733 with that little red line we've got drawn in there, and you can see this has been a challenge point for gold going forward. I'm not overly optimistic on gold right now. Why? It looks inherently weaker as these 2 top trend lines look like they're telling you, just trending down, but also that dollar index, right? If we can get a sell-off in the dollar index next week, a nice slide there, then I am expecting to see gold rally up a little bit, but it just doesn't feel like the strength is there. It's lost its luster. And maybe this has to do with an African claim that they found something like $13 trillion worth of gold. Okay, I've heard that before. Last one here is SLV. Let's just look at all the metals. So silver also, same picture as gold, just really getting absolutely murdered out there. I did sell the 1750 puts, which is right below me. We'll see if I get exercised on next Friday. Either way, I'm happy if I own it at 1750. If not, I will take my over 1% premium that I sold earlier this week. What else? The interesting one was palladium and platinum. So let's go down to some of those metals here. Here is palladium. Now, I don't follow the metals, so I don't know the drivers of a lot of these prices. However, palladium has been ripping over the past couple days. It's gone from about 2 weeks, gone from 1850 to 2168. That's pretty strong for metals, and it's up about almost 9% today. This is interesting because wherever you draw your trend line from on this chart, in this downtrend, we broke it, right? If you look right here, you could argue the trend is still intact, right? I think everybody can see that if you're going to draw a downtrend, you would argue, lower lows, lower highs, right? Boom. That's now broken. So the question now becomes, is this going to continue to rally up? Of course, I personally think this has some supply and demand issues that I am not aware of because I don't follow palladium. Yes, Kramer needs to say sell silver. Oh, I'd love it. I'd love it if he said silver is a horrible investment and make my day. Then here's platinum, which is a similar picture, but it's still in the downtrend. So the only one of these metals that's really broken out of it is palladium. Even copper. Right, copper continuing its slide after this beautiful hammer pattern on copper. I don't know if anybody caught this one, but you have this hammer pattern that was on July 6th, and then the next day, nothing but rip up. Awesome, awesome move. So that's most of your major market indexes here. Let me just real quickly see if I got any questions for me. All right, I don't see any questions. The premiums on gold and the numismatist coins are going to the... Oh, really? Good to know since I do own some gold coins. How much time do I got? Well, we're going to have to wrap this bad boy up. Let me show you what's cooking for Monday's trading activity. Now, I'll show the economic calendar. There's only 52 companies reporting earnings next week. So it's like, okay, yawn fest, right? Not so fast. Starting Thursday and Friday, guys, is the kickoff to earnings season. It is going to be a volatile one because it's mainly the financial firms. You have J.P. Morgan, I believe Citibank, Wells Fargo, BlackRock, Bank of New York Mellon, U.S. Bank Corp. Huge financial firms are reporting next week. And as we look at these price charts, you look at something like XLF. Here's your financials. Pretty much following the market, kind of stabilized right here. The trend is still down. The assumption in my mind is that they're already pricing in bad earnings going forward, but any surprise there can create a lot of ripples in the market. So I'm really excited for Thursday and Friday of next week, and we'll have to wait and see what ultimately pans out. But that's the main thing happening next week from the earnings perspective is Thursday, Friday. Here is your economic calendar for Monday. Really not a lot of huge stuff. Certainly for the U.S., we only have an FOMC member, Williams, will be speaking during the day. If you are trading some of these other currencies, yes, the banks are first. It used to be Alcoa, but Alcoa is no longer, really a member of the Dow, so doesn't make as much of an impact. But yes, it is going to be the financials kickoff earnings season. Yep. So you have Eurogroup meetings. I think that the important part here for the Eurogroup meetings will be its stance on Russia, what's going on with Sweden and Finland and other companies trying to join NATO. What's going on over there with those countries, and are they going to create more tension over in Eastern Europe? I heard some tweets from Putin saying something about the Boris Johnson saying, I'm just getting started with the Ukraine. It's like, oh boy, here we go. I heard some rumors and talk about, he's going after Alaska. Like, okay, buddy. Just so you know, we do have the largest military in the world, and our citizens, especially in Alaska, have more guns than anybody else. So I kind of want to sit back and watch that one on CNN. It's not going to be pretty if they decide to invade Alaska. We have the high ground advantage too. So come across the Bering Strait and see what happens there, buddy. Don't think that'll happen, but ultimately it could create a lot more volatility for our financial markets. And that really is it from the economic calendar for your Monday session. Anything else that I missed? What else did you guys want me to? What else did you want me to cover? Yeah, adios, Boris. Yeah, well, I won't make any comments on that one. I don't want to ruin any friendships I've formed here, but yeah, good riddance, Boris. Let's get you out of there. Anything else you guys want me to tackle before we wrap up here? We got about, in theory, we could go another 15 minutes, but I'm not going to go to a 1 hour show today. Plus, the real reason I want to end the show early is I'm out of my Angel's Envy here, so I really need to get downstairs and have another glass so I can go enjoy some sunshine. NJ, there you are. Apple in supply. AAPL. Yep. You know, it's kind of tricky when you look at a chart like this, right? What you know, you're looking for a supply zone, and I'm going to start off just by highlighting the whole area. So you look at this, and you're like, okay, I can't personally have this whole area as a supply zone, right? It just doesn't make sense. I mean, at least for me, it doesn't make sense to do that. So, you know, you kind of have to whittle down. If you are using kind of OTA's methodology and looking for specific chart setups, I would contend that we are actually not in it. We're a hair away. We are ever so slightly. For me, let's see if I can snap this on here. Oh, it won't snap with this one. So to me, that low right there is 147.46. So if we get to 147.50 on Apple, then in my opinion, you're in supply. But right now, not quite there. We're 147 at this moment. So you got a little bit to go. But yeah, I would say you're coming into supply. And then as we zoom out, would that be a logical short position? I would say yes, that is a logical short spot because it's been trending down. Now, the only thing that I would say is cautionary here is notice that this most recent low that happened on the 30th of June is not a new low. It's a higher low. It's not a new low. So this is a sign of strength. Even though we're in a downtrend, this little candle right here is a sign of strength for it. So there you go. That's Apple. What product is the biggest driver of Apple's earnings? No clue. I have no idea. My guess is it's probably the Apple Watch right now. I don't know. I have no idea. Let's see. USD JPY, which I think is going to continue its trend to the upside. Might have a little bit of a pullback here because I think the dollar is due for a pullback. But here's your USD JPY. JPY says possible breakout. Well, first off, let me go out to a weekly just so I can see the bigger picture. And I'm just looking back here to see where might it come into. What might be the next challenging area for this on a weekly, which is literally where we are right now. So I'm going to put a yellow box on here, and I'll go on the weekly from that point to there, take the square, and drag that over. So that's where I think, at least from my perspective, is where the supply zone is for Japanese yen right now. Bear with me as I try to stretch this thing out. Man, it was so long ago. It was back to 1998 was the last time we were up at that supply zone. Just to put that into perspective. And we are dead smack in it right now. So I like it. I like the fact that we're up at that level. I think the logical thing, though, is you're going to have a retracement. You're going to have a pullback because the dollar is looking incredibly strong, but it's also in supply. So I would think that you're going to have a little bit of a pullback here. You have consolidation going on right at that overhead supply. If you notice, what does this mean? Well, if you have this consolidation at supply, this is technically eating away at any orders that might be sitting there. So I'm liking it. I think that you'll ultimately see the US dollar, Japanese yen rip through this level. I think that's, in my opinion, I would almost guarantee it. Can't guarantee anything. It's just a question of when. I think you'll probably have a pullback and then another charge up at that dollar, at that ceiling that you have mapped out there. All right, Tesla. Tesla's long position set for Apple 140 to 130. Okay, let me check that one out in a sec. So Tesla is getting a lot of heat. In my mind, Tesla is just traversing back and forth in this $150 range. I know it's insane to think that $150 is a range-bound environment. However, if you are a spread trader, this is a great opportunity for you. Now, you got to be careful because the way Tesla moves, it can have monster days based off of some announcement or some tweet by Elon Musk. Right now, we aren't seeing too many tweets from Elon Musk about company productivity, more about his fornication and how he has twins with his, executives in some little room in his office. So who knows what on earth is going on over there in Elon Musk's world. But when I see a chart like this, this is one of those ones you look for and you hope you find, because as a spread trader, someone who's, just basically selling the spread and collecting premium on it, these are golden eggs. I know Tom probably is looking at this one going, I like it, right, Tom? Sideways action, perfectly sideways. If the Twitter deal is off, Tesla will add another 100 and 150. I think so, too. Sorry, this is a very crude one, so it's one of the funniest posts. Because there's all this talk about Elon Musk having all these children with all these different women. And there was one of the tweets I saw today said, Twitter may be the only deal that Elon Musk pulls out of. But I'm dumb. Oh, I couldn't resist. That one literally made me laugh out loud. So with regards to Tesla, yeah, I think that it's dangerous. It's really risky simply because of how volatile it is, Judy. Right now, I mean, I'm not interested because it's traversing sideways. As a trader and someone's looking for swings, if it breaks this high, I'm good to go long. If it breaks the low, I'm great to go short. Is there a gap up there at 850? Yep. An unfilled gap right there. It's actually higher. I would say the gap to me starts at the origin of the gap. So in this case, that gap would be 866 and a gap down to 836. So yep, you got a nice gap there. I know, Big Eb, terrible. It's the whiskey talking. I'll keep it PG-13 for the remainder. Okay, that's it. Let me real quickly look at this. You think Amazon has bottomed after it split? That's a tough one. Look, I think if you were to give me 3 companies to choose from, Tesla, Amazon, and Apple, I would rather go long on Amazon in the long term. I think Amazon is not going anywhere. They've solidified themselves as the juggernaut, and I do agree with Larry that there is probably more upside potential here. Now, I don't look at the fundamentals per se. That's Larry's thing, not mine. But I do like Amazon, and I would actually pick Amazon going forward. Let's see. iPhone is key. There's a planned obsolescence of the product. Yep. It's obsolete every year or so. They have to buy a new one. OTA is a long position set on Apple. Let me just real quickly check the OTA one, see if I agree with it. Not that it matters if I agree with it. Everyone has their own opinions about where things should be. So let me put 3 lines on the screen here for everybody to see. We have Apple up here on a daily, and I'll put those coordinates that Chris has mentioned. 140 being your entry price, so there's 140. We have a stop loss at 138. 138 and a target at 150. So you're looking for a $10 profit, $2 stop loss, 5 to 1. All right, and let's go 150 for your profit target. And hitting OK. So as far as demand zone, mine would be a little bit different. I definitely see the target. The target's an easy one. The target here is actually at the upper end of that range. So this is why I don't do OTA picks. They asked me to do some. I don't want to do them. This is why I don't normally do picks on this show, because I do things slightly different. And it's not that my way is better or their way is better. It's just this is how my brain thinks and how I work it. So if I look at those numbers, there's a couple of things that I need to know first. Number one is my target's not going to be 150. And the reason for that is if it's 150, it has to get all the way through the supply zone and hit this top piece here. Now, there is a supply zone above it. So I would be more cautious, and I'd say my target is more like 148 as it enters that zone. The other piece here is I need to figure out why this specific area. I actually would probably minimize mine. Mine would probably look something like this, right? So my trade setup personally would be 139 to 138. I got a $1 stop loss and a $7 winner. It would be the profit objective. But it's just my own little tweaks on it. And again, I don't need to encourage anybody to do my style. It's not like mine is superior or inferior to anybody's. It's just what works for me. All right. That was it. You guys almost got me to a 1 hour show. Good to see you, Gallo. Have a fantastic weekend. Let's see. I'm bearish, still bearish on Tesla. It needs to come in line with other automakers. Yeah, but it still has such a huge competitive advantage. It's dominating. Okay, that's it. I need to go get some whiskey. Anyway, I hope you guys enjoyed today's show. If you did, you can let me know. You can give a thumbs up if you want to. For those of you who are new, hit that subscribe button. If you want to have me go a specific topic next week, you can simply put it down below the YouTube video. I will... I think it has a huge competitive advantage. It was first to market. They got I guess the Consumer Reports numbers don't reflect that they are not producing great vehicles. But, let me rewind here. So I have a guest on the program next week. We are going to have Scott McCormick on, I believe, Wednesday, but I'll update the calendar on TraderMerlin.com, so you can check out there. I also am trying to get a commodities guy, but it's hard work. Really struggling to get him on the program. So anyway, that's going to be it for next week. Of course, you have a lot of earnings at the tail end. If you guys want anything covered, email me at TraderMerlin@gmail.com or send it underneath the YouTube video. Until then, have a fantastic weekend. I did do gold, Daniel. I did do gold. Yep, we weren't bullish on it. I'll show you the chart here real quick before I wrap up, and I'm out E5,000. Trend is down. You are at a demand zone. I do expect gold to have a small bounce because I expect the dollar to sell off next week. That said, I don't think that 1733 level is really going to hold much longer if the dollar keeps rallying. Here we go. That's it, my friends. Have a great weekend. I will see you all on Monday. Take care.